So let's do something a little bit different today. Let's look at some stocks that have had some of the biggest losses in terms of percentage over the past year. And yes, unfortunately, there are a bunch of retail favorites on this list. Now in the past, stocks like Meta have been on this list because they were down massively over the prior year. But there have also been stocks on this list like Tattooed Chef as well. So I'll tell you if I think there's massive opportunity at these lows like there was with Meta, or if these stocks are a complete trap and you just need to run completely away from them so that way you don't get buried in a bad company. Just make sure you like the video if you like getting the truth without the hype, and if you kind of like hearing about some stocks that we don't normally talk about here on this channel. Because honestly, there's some stocks on this list I'm not sure I've ever talked about before, so we're going to talk about those as well. And if you want information on being financially free or retiring early, make sure you check out the pinned comment down there for my new channel where that's all that we talk about, being financially free and retiring early and how to do that. All right, so just keep in mind, I don't care about 52-week highs or 52-week lows or this stock has had a massive loss over the past year or anything else like that. And that's simply because a stock can be at a 52-week low or have a, 75% drop in a year. And that still means absolutely nothing in terms of valuation. It can still actually be overvalued. And again, in other cases, a stock can be at a 52-week high and still be significantly undervalued, or can have a 200% run in a year and still be significantly undervalued, right? I mean, we've seen that with Meta, we've seen that with Nvidia, some other things like that. So for me, a lot of these metrics don't make sense, but they also may very well be letting you in on an opportunity. So that's why we're going to discuss them today. And no, I'm not trying to create controversy with my takes, but I do know a couple of the stocks, especially the last two, are controversial. So, hey, guess what? We got to talk about them and I got to give you an honest opinion. So the first stock is Chewy. Now here's a stock I know we haven't talked about on this channel, but I do get asked about it periodically, both in my group and in the comment section here. So it was a good one I thought we'd start with. Now it's down, I think, what do I got there? 64% over the past year. And honestly, some of the ratios actually look pretty good, especially whenever you kind of compare it to its competitors and kind of to the sector and the industry that it's in. They're really not all that bad. It has been beaten down, and unfortunately, expectations have also been lowered, which also kind of works in your favor because it kind of means the worst may very well be priced in. So this upcoming earnings call is going to be huge for the stock. Now, that doesn't necessarily mean run out and buy it because the worst is already priced in, because honestly, you can have a disaster earnings call and that right there will send the stock back down a lot further. I haven't deep dove it or anything else like that, so you got to do your due diligence on this stock. But whenever I'm looking at it, it might very well present an opportunity because a lot of the things that I normally look at line up very, very well. But again, you got to do that due diligence. You have to dig deep on these stocks to actually form an opinion, to actually see what's going on. What did management say the last earnings call? How is that going to compare with what they say on this earnings call and some other things like that? But if they give a decent earnings call here and some good guidance, this one right here could be one that recovers nicely. But again, if it's not a good earnings call and with everything already priced in bad and expectations already super low, if it's a disaster, you could be in for some pain with this stock. So stock number 2 is Lucid. Look, I know this stock comes up on every worst is list that you have out there pretty much for more than a year now. It's just continued to degrade and degrade, and the situation there continues to get worse and worse. As soon as it hit the market, it went straight to the moon, and everybody was saying it was the next Tesla and all that good stuff like that. And we all know that wasn't true at all, and it's just continued to come down. Now, there are some things to like about the stock, like the fact that it is Saudi-backed, they have cash, but there's a lot of other things to not like about it, to include just kind of the niche that they fill in the first place, high-end luxury, which always suffers during times like these where interest rates are high. And of course, EVs is just kind of in a lull right now. It's really, really hard in the first place to get EVs and people to convert over to EVs, at least here in the US. And then 2, you add in the fact that interest rates are 6, 7, 8% versus 0%, 1%, 2% on a car loan there. And that makes it infinitely harder for a stock like Lucid to get off the ground. And never mind the fact that they're struggling with actually just executing and kind of, manufacturing and getting themselves on that other side of actually being able to scale this product. They haven't done a good job of that at all. And yes, everybody struggles with scaling it. Took Tesla a long time to figure out how to do it. Now they know how to do it, but it took them time to get there. And of course, they're right in the middle of that battle right there. And unfortunately, it doesn't mean you're going to get through to the other side. So that's kind of the huge risk factor here with this stock. Now, it has earnings next week as well, and it's down 69% for the year. I know it's coincidence, guys. I didn't make it up. That's just what it said today whenever I pulled the chart. So nonetheless, It's down 69% with earnings coming up here. And just like everything else, they've continued to lower expectations. Growth is actually negative year over year. And that's the expectation. So, you can imagine how, you can see how a lot of worst case scenarios are baked in there. But I personally, they have not executed on any level. They have not executed to reduced expectations repeatedly. So for me, it's a show me kind of deal. Show me you can meet or beat expectations quarter after quarter before I have any confidence in a stock like this. So for me, I got to stay far, far away. So stock number 3 is Hertz. Now this one's only down 61% in the past year, but it's Hertz. They've already gone bankrupt once. They were able to kind of restructure, and I understand some people played the bankruptcy trade and made some money there on that, but that's rare. Usually when there's a bankruptcy trade, you end up losing all your money. That's usually what happens. But clearly, they have not figured out, despite the bankruptcy, despite all the restructuring, a lot of the things that managements have done has just not worked. And this company has continued to decline. And I don't know. And there's other, car rental places, car rental stocks. If I could talk, there's other car rental stocks that are struggling as well. So clearly the entire industry is struggling. And hey, it is what it is at this stage, guys. I don't know if Hertz can ever make it back. If you were able to restructure everything underneath bankruptcy and you still aren't able to continue to turn that ship around after the bankruptcy there, I know that for me, it's one, hey, again, prove it to me, show me. So it's one I'm definitely staying far, far away from. So stock number 4 is ChargePoint. This one is down 82% over the past year, if that tells you anything right there. And I don't know when the bleeding stops with this stock. I know whenever, kind of the EV rage was going on, EVs were all the rage and everything. I agree, there needed to be more charging places out there. And when I looked at ChargePoint, I didn't like the margins at all. I didn't like it back then. Clearly, they've then improved to a point to where this company can make forward progress. And for me, it just seems like nothing's going right in regards to this. And more importantly, Tesla's eating their lunch. I don't know specifically how Tesla is able to achieve so much better margins and how ChargePoint over the past few years has not been able to take some lesson learned or do something better to get those margins improved. That would really, really help this company, but they haven't been able to solve it now for the past 2-3 years. So I don't know if this management team can solve that problem. Now, who knows? I have not listened to the earnings call there, so you got to listen to the earnings call. But for me, I didn't like the margins a long time ago. I don't like them now. And until they actually figure out a way to improve that and show actual growth as well and not have Tesla eating their lunch all over the place, this stock to me is in a lot of trouble, and it's not one that I want any part of at this time. All right, so on to the controversial part of this list. It always creates the most comments, and these two stocks specifically, one has kind of died down. The other one hasn't died down quite yet, but it might very well here soon in terms of the comments, but let's jump into them here. So number 5 is AMC. This stock is down 88% over the past year, and it's one we've been warning about for a long time. I'm sorry, apes. I know, go ahead and blast me down in the comments. I'm good with it. I understand some of you guys, we actually have fun banter kind of going back and forth. You're not a ridiculous ape, but we have some fun banter about the stock and such. But it's just one this management team cannot get out of its own way. You guys know that. I haven't been a fan of anything they've done from the start, and clearly neither has Wall Street or anybody else. While the rest of the market has rallied, this stock has continually just gone into the toilet, and it's unfortunate. I love the movies. I don't get to go nearly as often as I want, but when I get a chance, I want to be able to go to a movie theater. I love the experience. I love everything about it. The popcorn's great. I just like it. But unfortunately, this management team just can't seem to execute anything at all. So for me, it's one I've stayed away from, talked about it. I don't care where the price goes at this stage. I want nothing to do with this stock. And finally, the final stock, that would be Mullen. This stock is down 99+% over the past year. Now, think about this, guys. This is all, I understand a lot of the Mullen bulls have kind of disappeared. But boy, whenever I spoke out against the stock the first time, man, did I ever get some really heated comments with all these bullish points. Here's kind of the counterpoint to all that. If Tesla is struggling right now in the environment, and they are by far and away the best, they have all these things figured out. The only one kind of past their ramp stage in regards to US manufacturers here, and they're still struggling right now. You can only imagine what a company like Mullen is going through and has gone through over the past year. It's just been a disaster. There's no other way to do it. Multiple reverse splits, which is just crazy in the first place. That's the only reason why the price is what it is, despite the fact it's down 99+%. That's the only reason why the stock is. There's nothing good in anything I look at for here. It is just basically a wait and see game of when they finally run out of money. And any sort of pop in the stock, I don't care about. That is simply a Reddit thread creating some sort of, and the stock price is so low that Obviously, retail traders and other folks like that can move it very, very, very easily. But that's all that is. There's nothing here materially or otherwise. It's just simply people playing games, and it's just a matter of time before this stock goes under. And if you want to see my complete watch list with all the stocks that I am looking to buy, and see my buy and sell alerts in real time, take 5 courses for free, be a part of the best 6, 7, and 8-figure Discord out there, use our stock analyzer tool for free, and so much more, make sure you check out the pinned comment down there and see if a membership's right for you. There is so much coming, guys. I'm so excited for them. We continue to add things in there all the time, so make sure you don't miss your opportunity to become a member. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.